What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. So we got a lot going on here in our country right now here on a daily basis. We just got the massive Social Security raise announcement here. I just did a full video here on that. I'll link you to that here if you didn't see that here as well. And as that is coming out here, we got the readings that inflation isn't really going down. And you can see here right from the Wall Street Journal, inflation report seals the case for probably another 0.75, almost a full percentage point rise again in November. So this comes after how many have we had now? 4 or 5 interest rate hikes this year already. And we're going to be getting another one in November, probably of 0.75% again. Remember that 0.75% is the largest interest rate hike we've ever seen in the United States. I don't think we've ever had a full 1.0% interest rate hike in one shot. And this, we're probably going to see another 0.75% again because of how stubbornly high inflation has stuck in there. Yeah. And this is not really good because consumer debt has been really bad. Take a listen.
There are certainly signs that strain has started, which kind of goes back to this conversation we were just having. Courtney Reagan has that story for us. Hi, Court.
Yeah, exactly, Morgan. So it makes sense that consumers are starting to worry, right? With interest rates moving higher and inflation remaining stubbornly high, as we're discussing here. It's a key watch point with the holiday spending season really starting to begin right now. So the latest Federal Reserve Consumer Credit Survey shows an increase in credit growth from 7.8% to 8.1%. Oxford Economics notes it could be a sign of increased reliance on borrowing, but it also could be a return to more normal use of credit cards after consumers paid down debt during the pandemic. Though Moody's actually reports that American households are taking on more debt, up $312 billion to more than $16 trillion in the second quarter. And while mortgage debt grew almost 9%, Moody's says households are not financially stressed because non-mortgage debt remains around pre-pandemic levels. But Bankrate points out that average credit card rates are at the highest level since January of 1996, sitting just below 18%. S&P Global Intelligence does show delinquency rates ticked up slightly for most of the 6 major credit card issuers. And S&P and Experian's latest monthly credit report shows that auto loan defaults are ticking up just slightly, though overall the composite was unchanged for the month of August. Debt is becoming more expensive, of course, as personal savings rate also sits at the lowest level since September of 2008. Now, beyond the data, it's important to point out that consumers are starting to feel strained. A Numerator survey shows consumers' concern about the impact of higher prices, even as gas prices have fallen in recent months, is still relatively high.
Here's a look at inflation breakdown for September 2022. Based on this chart, inflation jumped by 8.2% in September. Now, remember, that's the average inflation number. Everything is a little bit different here, as you can see here. So some of these numbers are insane. Food at work or school, 91.4%. Airfare up 42.9%. Utility gas, so this is where gas this winter is going to be very expensive this winter. Natural gas and other types of home heating gas up 33%. Butter and margarine up 32%. Eggs up 30%. Health insurance up 28%. And that's been going up every single year. That's why it's a blessing this year that Medicare Part B went down by $5 a month. I know people saying, oh, it's only down $5 a month, Jimmy. But look at health insurance overall is up 28%. So remember, last year went up $21. So it easily could have went up by more than $21 this year because inflation's worse this year than last year. So I guess count your blessings when you get them, right? Because imagine if it would have went up $30 this year. Public transportation up 27%. Gasoline, all types, up 18%. Yeah, because I mean, gasoline went up a lot, then it went down for 100 days. Now it's going back up. Don't trust the pharmaceutical companies, the prescription drug companies, or the gas companies. Yeah. Poultry, chicken up 17%. Electricity up 15%. Milk up 15%. Food at home up 13%. Tax preparation 10%. Fruits and vegetables 10%. Car insurance 10%. All items, there's the average 8.2%. Used cars 7%. Rent 6.7%. Let me know about rent. How much has your rent gone up? 6.7%. It's interesting there. All items not counting food and energy is 6.6%. Medical care services 6.5%. Alcoholic beverages away from home 5.8%. Clothing apparel 5.5%. Daycare and preschool 5.1%. Major appliances 0%. Car rentals, -1%. Computers, -3%. That's surprising with the chip shortage and the wait times on computers. That's surprising. Now, computers have been coming down in prices for a long time. So I wonder if this would have been down a lot more. Uncooked beef steaks, -5% almost. That's interesting there. Sporting tickets, -10% almost. That's probably because of the pandemic. A lot of people not wanting to go there as much. Televisions, -18%. Yeah, but they have been getting cheaper and cheaper throughout the years. Smartphones, -21%. You know, the new iPhone just got announced and they kept it the same price, despite, getting faster and all that stuff here. They could have raised the price, but they kept it the same price. So interesting to see there. The IMF, the International Monetary Fund, which is just kind of a global forecasting, they kind of keep an eye on the global economy, cuts the global growth forecast for next year and warns the worst is yet to come. So that is pretty ominous. Pretty ominous. Again, this is why a lot of people, if you watch my show, you know this. A lot of people think that this is only going on in the U.S. It's not the case. Not the case. This is going on everywhere in the world. Inflation, gas prices, food prices is going on pretty much everywhere across the entire world. The International Monetary Fund predicts global growth will slow to only 2.7% for the entire world, and even lower, 0.2% lower than its July forecast, and continues to lower growth forecasts. Anticipates that 2023 will feel like a recession for millions around the world. Aside from global financial crisis and the peak of the pandemic, this is the weakest growth profile since 2001, 21 years ago, during that recession. The IMF said in its World Economic Outlook published Tuesday. Wow. And it was down 6% since seen in 2021. The worst is yet to come for many people. 2023 will feel like a recession. Echoing warnings from the United Nations, the World Bank, and many global CEOs. Let me know your thoughts on this. More than a third of the global economy will see 2 consecutive growths of negative growth. The U.S. has already seen 2 quarters of negative growth, while 3 of the largest economies, the United States, the European Union, which is multiple different countries and China will continue to slow. This is what you don't hear in a lot of media, but this is, I mean, like half the world or more are already just in that one sentence. IMS chief economist says, quote, there's going to be a lot of slowdown and economic pain. They also said the war in Ukraine continues to powerfully destabilize the economy, along with its severe energy crisis in Europe. The price of natural gas has more than quadrupled since 2021. If you use that to heat your home, it's going to be very expensive this winter. Russia now delivers less than 20% of its 2021 levels, which is part of the reason why prices have skyrocketed for natural gas prices. It's caused a shortage in the market for the world, which is caused, even if we don't buy any, it's caused the price to, you can see, read it right here. Natural gas prices have quadrupled since 2021. Food prices have also been pushed up as a result of the conflicts in gas prices as well, because you have to deliver all this food everywhere around the world. Yeah, and especially with inflation not coming down here in the US, the Fed and Feds all around the world as well continue to raise interest rates. Looks like this is going to go on for a while. So, yeah. Hopefully you locked in a low, if you're a homeowner, hopefully you locked in a low interest rate because, you know, at the beginning of this year or all throughout the last year or two, interest rates were pretty much at the lowest we have ever seen ever. So even right now, if you're going to buy a home, you know, interest rates are at 6-7%. It's not terrible. It's higher than what we were at. We were at maybe 3%, maybe even in the twos a little bit, depending on the type of mortgage you got, which was just really just unbelievable. It's like the lowest interest rates you've ever could have had ever in the history of your life. But yeah, so hopefully you locked something in there. If you watch my channel, I definitely sprinkled in some suggestions there. But that was really the cream of the crop, the best interest rates that we might ever see again. So refinancing was definitely a good thing to do there. So the problem is now is if you want to sell your home, it's really a tough decision because do you sell your home and lose that really good interest rate that you had and buy another home and get this interest rate that's double? You're gonna pay $1,000 more a month in just interest. It's really a tough decision. It's gonna create a tough housing market for the whole country because, yeah, I mean, like think about it. If you went from let's just take a $300,000 home. If you wanted to just move down the street or move to another city for whatever reason and buy the exact same home, it's going to cost you, I don't know, $800 a month more, $1,000 a month more. I mean, you'd have to do the math, and you could go to Google and type in mortgage calculator. But it's just like a lot of people are not going to move just because of that. And if they do, they're going to feel a lot of pain. Now, hopefully, interest rates come down here maybe in a couple years, and the government's going to pay more money on their debt as well. So the government's not going to want to keep interest rates high, but it's something that they have to do to try to bring down inflation. We are seeing inflation come down because of this. I mean, the housing market was really just insanely expensive. I mean, we were seeing $300,000 homes, you know, asking price sell for $350 with 20 buyers, you know, overbidding. You know, the day they would go for sale, 20 people would bid on them. You know, who's the highest bidder? Like it was absolutely insane housing market. Same thing with cars. You know, dealers were asking price for cars. It was kind of crazy. It was kind of crazy. So it was an overheated economy. Why it got that way? I don't know. Maybe the supply chains and the chip shortage for the cars and stuff like that. The housing economy, the only really thing we can maybe think about is because interest rates were so low, why it led up to that. I don't know why everybody got so housing crazy all of a sudden, but you could let me know your thoughts on this. But we are going to definitely see a prolonged period of recession and economic pain for a while. So let me know your thoughts here in the comment section and what needs to be done here. And what, this is the number one thing on people's minds as they go into this midterm elections. So we got that's probably the number one thing, and a lot of other things like the Roe vs. Wade decision, women's choice, pro-life, gun safety. A lot of other things are kind of on people's minds, but the economy is number one. So you can let me know your thoughts here in the comments. I'll keep you up to date here with everything going on here in our country on a daily basis. Let me know your thoughts here. Make sure to subscribe down below to our YouTube channel. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. You can click here to see the Social Security announcement that just came out for raises. And here is my newest video about checks that are going out to millions of Americans that you might not even know about. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.